students, welcome to Sunil's tutorial. I am Sunil Medwani and today we will be doing this chapter called as fire. We are going to do illustration 7. We are going to do illustration 7, page 553. They are saying that Bush prepares his accounts on 30th June every year. On 30th September 2003, fire destroyed a greater part of his stock. The following information is available. First thing that you do is you make memorandum of trading account. The trading account which is made for the year in which fire has occurred is called as memorandum of trading account. So this is going to be from 1st July 03 to 30th September 03. Right? Let's start. Stock. They've given you opening stock. How do I know it's opening stock? Because they've given you stock as on 30th June 2003. So 30th June and 1st July is the same thing. To opening stock amount is 2,92,500. In a column, leave a line, draw a line. To purchase. Trading account rules, guys. Opening stock comes on the debit side. Purchase 6 lakhs in the inner column. Leave a line, draw a line. To wages 2,27,500 in a column. Leave a line, draw a line. Buy sales 10 lakhs. Next, the average percentage of gross profit to cost is 33 1/3%. Now guys, in the previous lecture we had seen average profit to sales. Here they have said to cost. Please underline that word to cost. That makes the sum a little different. Now let's see this. Cost price, selling price. They are saying that average percentage of gross profit to cost is 33 1/3%. To cost, to whatever they give you, assume that as 100. Either they can say to sales or they can say to cost. If they say to cost, assume cost price as 100. If I assume cost price as 100, they have given you that profit margin is 33 1/3%. 1 divided by 3 is 0.33. That means selling price is 133.33 and profit is 33.33. Right? Sales I know is 10 lakhs. I have to find out profit. Guys, since this is a recurring fraction on the calci, how will you do it? 10 lakhs into 33.333333, take it till the end. Takes about 6-7 digits. Divided by 133.333333, take it till the end of the screen. Right? How much does that come out to? 2,50,000?
Yes, sir.
So this is going to be my gross profit. Gross profit is going to be 2,50,000. Fine. Next, let's move on ahead. Stock of value 70,000 was salvaged. We'll see that later. Policy is 2,50,000. Again, we'll see that later. Further information given is stock at the beginning was calculated at 10% less than the cost. Right? Let's see next working note. Cost value. Opening stock. At the beginning means it has to be opening stock. Now they are saying that stock at the beginning was valued at 10% less than the cost. That means if the cost price is 100 rupees, it is valued at 10% less than that. That means it is valued at 90. The stock has been valued at 10% less than the cost. If cost is 100, that means value is going to be 90. We know that the value of opening stock is 2,92,500. So in that case, how much should the cost be? 2,92,500 into 100 divided by 90, which should come to 3,25,000. Right?
Yes, sir.
That means my opening stock is 3,25,000. But how much have I actually recorded? I have recorded 2,92,500. That means stock had been undervalued. How much had it been undervalued by? 3,25,000 minus 2,92,500 is the extent to which stock was undervalued. So this is 93 32,500, right? Okay, let's move on ahead. Purchases include purchase of plant 50,000. Add to it's included. Include means you have to less plant purchased 50,000. So this will become 5,50,000. Include is always deducted. Next, plant was installed in August by firm's own men, and firm's own men had spent time amounting to 2,500, which has been included in wages. I just explained this to you. If they say include, you deduct. So plant installation wages. How much is the plant installation wages? 2,500. So this will become 2,25,000. Right? Okay. So I have finished making all the entries. Let's tally, guys. So when you add this 3,25,000, 5,50,000, 2,25,000 and 2,50,000, that addition will give you 13,50,000. 13,50,000. The difference is called as closing stock. This is my balancing figure. 3,50,000. Fine, do we get this in here? Now, let's see this. Once you have the closing stock, next you have to make statement of claim. How do I make statement of claim? Closing stock. You just found out how much is the closing stock. 3,50,000. Less salvage. Now we had read that salvage is 70,000, right? So in that case, this is going to be 2,80,000. This 2,80,000 is nothing but loss by fire, right? Once I have loss by fire, then I can find out my claim. Claim is given by the formula loss by fire upon closing stock into policy amount. Loss by fire is 2,80,000. Closing stock is 3,50,000. Policy amount. Policy amount is given to you as 2,50,000. Fine. When you simplify this, you should get your policy amount as 2 lakhs. So the insurance claim that you will get will be 2 lakh rupees. Fine, do we get this in clear? Next, let's move on to the next sum, guys. That was illustration 7. Let's see illustration 8. Page 553 only it is on. Right? Let's see this. They have said that Mr. A prepares his accounts on 30th September every year, right? But on 31st December, fire destroyed a greater part of his stock. So first, let's make memorandum of trading account. Trading account. He makes accounts on 30th September. So from 1st October to 31st December. This is going to be from 1st October to 31st December. Let's start. Opening stock. To opening stock. is given to you as 29,700. Next, purchases. Two purchases. Purchases are given to you as 75,000. Next, two wages. Wages are given to you as 33,000. And by sales. Sales is given to you as 1,40,000. Fine. Let's see the adjustments now. The rate of gross profit is 33 1/3% on cost. Working note. 1. Let's see point number B. Since they've said on cost, assume cost price as 100. Right? Profit is 33 1/3%. Therefore, selling price will be 133.33. Profit is going to be 33.33. Sales you have calculated is 1,40,000. So get the profit. How will you get profit? 1,40,000 into 33.333333. Take it till the end of your screen. Then divided by 133.333333 till the end of the screen. That should get you your gross profit. Someone give me the gross profit, please. Is it 35,000? Okay. Let's move on ahead. Stock of value 3,000 was salvage. Insurance policy is 25,000. Okay, let's move on ahead. Stock at the beginning was calculated at 10% less than the cost. Right? You want to ask me something? Opening stock. Let's see the adjustment on opening stock. They are saying that cost value. They've given you that stock in the beginning is calculated. That means it has been valued at 10% less than the cost. That means if cost is 100, value is going to be 90. Value we know is 29,700. Therefore, you can find out the cost. Cost is going to work out to be 33,000. How did I get 33,000? 29,700 into 100 divided by 90. So that is going to give me 33,000. So add undervalued. So give me 33,300. It has been undervalued by 3,300. Next, let's move on ahead. The plant was installed by firm's own workers. He was paid 500, which is included in wages. Included in wages, you have to less from wages. 500. So that will give you 32,500. Next. Purchases include purchase of plant of 5,000. Less from purchase, plant 5,000. So this will come to 70,000. Right? Let's tally this, people. This is going to be 33,000 plus 70,000 plus 32,500 plus 35,000 is 1,70,500. 1,70,500. The difference is called as closing stock. This is going to be my balancing figure. 30,500. Right now, I need to make my statement of claim. Statement of claim. Closing stock. How much is the closing stock? 30,500 less salvage. How much is the salvage given to you guys?
3,000.
How much?
3,000.
So that gives you 27,500. That's going to be my loss by fire. Once I have this, then I can find out claim. Claim is nothing but loss by fire upon closing stock into policy amount. right? Loss by fire is 27,500. Closing stock is 30,500. Policy amount is 25,000. Right? So when you simplify this, you will get this as 22,541. So the insurance company will give you a claim of 22,541. So let's see the next sum, guys. Let's see illustration 9. Illustration 9, page 554. Right? Bonfire Enterprise closes their accounts on 30th June every year. On 30th September, a major fire destroyed most of their stock. Let's make memorandum of trading account. This is from 30th June. So from 1st July to 30th September. Right, let's start. Opening stock is given to you as 3,60,000. This is to opening stock is given to you as 3,60,000. Next, let's move on ahead. Purchases from 1st July to 30th September is 6 lakhs. To purchases is given to you as 6 lakhs. Next, wages to wages is given to you as 2,30,000. Next, sales by sales. Sales is given to you as 10 lakhs. Next, carriage inward to carriage inward. Carriage inward is how much? They give you carriage inward is 10,000. Next, carriage outward. Carriage outward is not an entry of trading account, hence it will not be recorded. It is recorded in P&L. We are not making P&L, so there is no need for us to record carriage outward. Let's move on ahead, people. Average percentage of gross profit to cost is 33 1/3%. Working note B. Cost price, selling price, profit. 33 1/3% of cost. So assume cost price is 100, selling price is 133.33, profit is 33.33. Sales you found out is 10 lakhs. So in which case gross profit will be 25,000. How did I get 25,000? 10 lakhs into 33.33 till the end divided by 133.33 till the end. So this is going to be 2 gross profit is going to be 2,50,000. Next, let's move on ahead. Stock of the value of 75,000 could be salvage. Policy amount is 2,50,000. Stock at the beginning was calculated at 10% less than the cost. Opening stock. Cost. Value. It has been valued at 10% less than the cost. So if the cost is 100, value is going to be 90. Opening stock is given to you as 3,60,000. So how much will this be? 3,60,000 into 100 divided by 90, which will come out to be 4 lakhs. So this is add undervalued.
It's 2,50,000.
40,000. Yeah, what is that?
25. It's 2 lakh.
2,50,000. Right? You've written 2,50,000. Okay. Next, let's move on ahead. Purchases include purchase of furniture of 25,000. Include, I told you, is to be deducted. So less from purchases, furniture. How much is it? 25,000. So this will come to 5,75,000. Next, amount spent for bringing and setting up the furniture in the office was rupees 5,000, which was included in carriage inward. Included in carriage inward. So you will less from carriage inward. Furniture 5,000. So you will get 5,000 outside. So this 2,30,000 comes out here as it is. Right? Okay. We've recorded all the entries. Let's start tallying. 4 lakh plus 5 lakh 75,000 plus 230 plus 5 plus 2 lakh 50,000 is 14 lakh 60,000. 14 lakh 60,000. The difference is to be written as by closing stock. This is my balancing figure, so this will be 4 lakh 60,000. Right? Next, let's calculate statement of claim. Statement of claim. Closing stock. Closing stock is given to you as 4 lakh 60,000 less salvage. Salvage amount is given to you 75,000. So in that case, you will get your loss by fire as 3,85,000. Right? Once you have your loss by fire, then you can find out your claim. Claim is given by the formula loss by fire upon closing stock into policy amount. Loss by fire 3,85,000 divided by salvage is given to you right in the beginning. See, right? You got the salvage amount, right? Closing stock. Closing stock is 4,60,000. Policy amount. Policy amount 2,50,000. Right? When you calculate this comes to 2,09,239. 209,239. That's the claim that you will get from the insurance company. Next, let's move on to the next sum. Let's see illustration 10. Page 555. On 13th July 2004, a fire occurred and partly destroyed the stock of Basma Corporation. Okay. Stock having a cost of 1,000 was salvaged. Insurance policies 15,000. The following particulars have been extracted. Let's make memorandum of trading account. They closed their books of accounts on 31st March. That means from 1st April 04 to fire occurred on 13th July 04. Let's start. The balance as per last balance sheet on 31st March 04 is stock of goods is 12,000. So to opening stock is given to you as 12,000. Now in this particular sum, they have also given you opening stock of creditors. Since opening stock of creditors is given to you, you need to make creditors account. Since opening stock of creditors is given to you, you will have to make creditors account. Creditors is a liability. Opening balance of liability always goes on the credit side. So by balance brought down, amount is 1,000. Opening balance of creditors is 1,000. Let's start. Transactions between 1st April and 13th July. Payment to creditors, right? If I'm paying to creditors, they are going to be the receiver. Debit the receiver, since they are the receiver, I will write this on the debit side to bank. How much is the amount? 6,200. Next, let's move on ahead. Return outwards 200, right? Return outwards. You must have purchased and you're returning those. That means this is purchase return, right? Two effects you are going to have for this. One, you're going to have this in your memorandum of trading as to purchase less returns 200. Second effect of purchase return is going to be in creditors account on the debit side to returns 200. So purchase return is going to have two effects. One, in your memorandum of trading account you will less from purchases. Second, in creditors account on the debit side you will write two returns. Next, returns inward. You must have sold, people are returning back to you. This is sales return. So buy sales less returns. Sales return is given to you as 650. Since we are not making debtors account, I don't need to make a second effect of this. Next, sales is 11,000. Next, unpaid creditors on 13th July. The closing balance of my creditors on the debit side of creditors account. Closing balance of my creditors is 800 rupees. Tally your creditors account. This is going to be 7,200. 7,200. The difference is 6,200. The difference is going to be called as purchase. Purchase. This is my balancing figure. So purchase is 6,200. Second effect of that, in memorandum of trading, purchase 6,200 minus 200 will give you 6,000. So purchases are going to be 6,000. All sales are made at a profit of 33 1/3% on selling price. Now this is going to be 11,000 was my sales, 650 is the return, so 10,350 is going to be my net sales. 11,000 minus 650 is going to be 10,350. Let's find out the gross profit, guys. Cost price, selling price, profit. Goods are sold on 33 1/3% on selling price. Guys, careful. In the previous sum they had said on cost price. Here they are saying on selling price. On selling price means you will assume selling price as 100. This is 33 1/3% means 33.33. Sales you found out is 10,350. So you can find out your profit element now. How will you do that? 10,350 into 33.3333 till the end divided by 100 should give you 3450 to gross profit. 3450. Right? Do we get this thing clear? Now, let's tally this. We've got our gross profit 18, 19, 20, 21,000.
So shouldn't it be gross loss?
Why should it be loss, good girl? Here I'm using unitary method. 10,350 into 33.33 divided by 100. Right? 21,450. 21,450. The difference is going to be written as by closing stock. This is going to be my balancing figure. Right? 10,350 minus 21,450 is 11,100 is my difference. Now, once I have this, let's make statement of claim. Statement of claim. Closing stock. Closing stock we found out is 11,100 less salvage. Salvage is given to you as, right in the beginning they've given you that 1,000 rupees is your salvage, right? So in which case your loss by fire is going to be 10,100. Once you have this, then you can find out your claim. Claim is given by the formula loss by fire upon closing stock into policy amount. Loss by fire 10,100, closing stock 11,100, policy amount. Okay, here guys, my policy amount is more than my closing stock. Right, guys, now please pay attention here. In all the sums that we have done before this, the policy amount was always less than the closing stock. Right, here as policy amount is greater than the closing stock, therefore I can say that in this case claim will be equal to loss by fire. Your formula changes if your policy amount is greater than your closing stock. Since policy amount is greater than the closing stock here, therefore your claim will be equal to loss by fire. So your loss by fire is 10,100. Your claim is going to be therefore 10,100. Right? Do we get this thing clear? Okay, we'll stop this here for the day. Thank you very much.